names, some of these stocks are doing pretty well. We'll talk about stocks that are doing well. VST Tillers, well, that stock has been doing quite well. It's been seeing some traction because the update that they gave for the month of March was quite strong, while tractor sales as well did see some bit of a growth. To understand what's the outlook from here on, we're joined by Mr. Antony Cherukara, the Chief Executive Officer at VST Tillers. Hi, Anthony. Good morning. Thanks so much for speaking to us after a while. Well, firstly, on the Tillers business, there's a big bump up in the month of March. Was it some one-time order or a year-end phenomena? Because you've clocked close to 5,500 units. And also from this base of around 45,000 units in FY23, what can you deliver in FY24?
Good morning, Nigel, and good to talk to you again. March usually is a month where some unutilized funds do get released. However, having said that, we were clocking an average of 3,000 plus tillers with our coverage increase, the dealership increase, and new product introduction. A bump up of about 2,000 numbers happened in March due to the release of unutilized funds from states. We are looking at FY24 positively as well. We are looking upwards of 15% growth in the tiller segment and 15 to 20% growth, which is higher than the industry guideline that has come because we have launched new products and we intend to get into the higher horsepower segment that I've talked about earlier.
So in tillers, you're talking about a 15% growth, and in tractors, you're guiding for a higher growth. Is that correct?
Yes, we are looking at a higher growth in tractors.
You know, the reason I ask you this, Anthony, is because you have a big capacity of more than 30,000 units. You're not even selling 7,000 units in a single fiscal year. So by the end of this year, just going by it mathematically, you should end the year close to around, somewhere in the vicinity of around 8,500. Would that be a gettable number?
Yes, that would be a gettable number. That's what we are working on. Our exports is also growing. And as I've said before, the utilization of the plant is on multiple fronts, with the work happening with Zitor on various fronts, the work happening on supplies to electrical tractor companies outside India. All this is leading to increased utilization of the plant.
Okay. You also said that higher funds from states generally tend to come through towards the end of the year, and hence this March figure looks quite inflated. So on an average, can you tell us, the preceding months have seen about 4,000, 4,300 units per month, both tillers and tractors put together. Is that an average you hope to maintain in April, May, June as well, or do you think you could do higher on a monthly basis?
See, the average up to February has been at 3,000 plus tillers and about 500 to 600 tractors was the average. And we expect to do better in the coming months, especially in April, May, June, considering that the monsoon effect will take effect after that. So the reservoirs being full and the minimum support being good, I think Q1 should be better for us.
Okay, Q1 should be better. In the last time when we spoke to you, you had revised your margin guidance lower. You said that you'll do about 11 to 13% margins. Given the pressures that we've seen on the commodity side, 9 months of FY23 also saw a big hit to margins. You were under 11%. Can you tell us, is there a possibility of a further slowing down of margins? If yes, to how much? And would you stick to this 11 to 13%, or is there, you could change that as well as things move forward?
Yeah, the earlier guidance I had given on margins was 12 to 14%. We should be able to hold that in the financial year that just got over, but it's too early to say anything. The results will come out in May. However, going forward, we are looking at a guidance of 11 to 13%. This is considering the fact that we will be investing in the growth, entering new markets globally as well. So this would require revenue expenditure, and hence the guidance of 11 to 13%.
So you're entering these new markets and investing in growth. Can you tell us what is the amount that you're going to be investing? What's the capex plan, and how much of it will be from internal accruals? Will you be taking on any debt?
We will not be taking any debt at the moment. The capex plan for FY24 is about 70 crores, which also involves developing of a global tech center, which is an R&D center for farm mechanization, which will focus on innovation, especially for India and the global market in the EV tractor space.
Okay, all right. Very quickly, Anthony, before we let you go, a quick couple of questions. Readers, what was the what was the number that you did in FY23, and in FY24, what are you going to do?
We did close to 4,000 numbers of readers. We are looking to grow that exponentially in FY24.
Okay, all right. Exponentially, you want to put a number to that? From 4,000, you were just doing 1,000 not too long ago. That moved to 2,000, now to 4,000.
Yeah, I have not given guidance on the top line before, and we don't intend to do that. But the idea is to grow that exponentially.
All right. The clincher for the stock, though, is going to be what you're going to do with that that land that you have in Whitefield. Have you all taken a call? Will you be selling it, or what is the plan? Very quickly.
Right now, there is no decision on that, but the work is going on that front. We will let you know once the decision is done.
All right. Thanks a lot for that, Mr. Cherukara. Appreciate your thoughts and the numbers that you've given us. And all the best for the months to come. That's VST Tillers and Tractors. March generally tends to be a good month for them. Some unutilized funds come through from the government's end. So this time the numbers have looked good. But they're also holding on to a 15% growth target in the tiller segment and a 15 to 20% growth target